facing their governance, technical and institutional frameworks to establish a credible track record. This will increase their leverage and negotiation abilities on the international level. Ladies and gentlemen, this is the highlight for yesterday's proceedings. Thank you very much.
Thank you very much, Mabel, for doing us the honors to run by us what happened yesterday. I think the summary of it all was that the transition is happening. It's not waiting for Africa. And the quicker we take decisions, that helps us to participate, both in the economics of it and also saving the environment, the better it will be for all of us. So we're encouraged to think quickly and plan, engage to ensure that we are part of the global movement to actually transition and also address the challenge that we are faced with, because much of our revenues are actually coming from the extraction of the oil resource. So if the transition is happening, how do we navigate that complex problem that we have, as African country, particularly oil producing African countries? So we are privileged today to listen to the business community to see how, from your end, things are shaping up to ensure that business is also thinking through the challenge we have. To facilitate this session, we are privileged to have Ms. Rosalind Kenya, a partner, first of all, of ACEP and managing director of Kina Advisory Limited. Rosalind has been an important partner for ACEP for the simple fact that she believes in honest conversation. That is something we really appreciate and cherish as ACEP. She is a trusted advisor to boards and senior executives of global companies on sustainability, responsible business investment, and partnership in emerging markets. She's also an experienced professional non-executive director. In 2014, she was awarded an MBE for services to CSR for the benefit of youth in Africa. Rosalind is a member of the Bar of England and Wales and of the Chartered Institute of Arbitrators. She's a non-executive director of Car Bank Limited, Ghana, a board member of Result for Development, R4D for short, vice chairperson of the Africa Gifted Foundation, founding president of International Women's Forum Ghana. Rosalind is also a non-executive director of Accra Energy, AS, as
I was,
yes. So, I mean, this is just a brief of the many hats she wears, and we are grateful for taking up this role to chair this morning's session. So I hand over to you, Rosalind, to handle the panel. Thank you very much.
Thank you very much, Ben. Good morning, good afternoon, good evening, wherever you are in the world. I would like to thank the Africa Center for Energy Policy for inviting me to moderate this panel on such a significant topic for our times and to be a partner with them in this very important summit. I'd also like to thank all of you who have joined us today to hear views from a knowledgeable and very experienced group of panelists about the options that the oil and gas industry has to decarbonize their operations. Just to give you an idea of the format, we will have a panel discussion for about an hour and then then open the virtual floor to questions and comments from you for about 20 minutes. We've already had some questions from some participants, so we'll take those first. Ben, I'm not sure whether there's a chat box that people can put in comments and questions during the course of the session, but if so, could you please do so? So before we introduce our panelists, I thought it would be useful to set the scene for our discussion. I believe that we can all agree that 2020 has been unlike any year that any of us, or at least very few of us on this webinar, have encountered. The coronavirus pandemic has taken center stage and has often caused other important issues to be sidelined as governments, businesses, and people literally struggle to make ends meet and to keep us all safe and well. The problem of climate change, which results in increasing levels of carbon pollution in our atmosphere and the consequential adverse impacts on the environment, on our health and general well-being, and without exaggerating, on the very foundations and fabric of our existence on Earth, is one such issue that was in danger of taking a backseat. However, I've watched over the last 9 months with great interest how the conversations that have been intensifying around climate change over the last few years, and especially with the Greta effect, have continued. I've been in the UK during this period and have been struck by how many advertisements on television have taken on a climate change or even environmentally friendly nuance. Advertisements from supermarkets for particular foods trying to show that they are produced minimizing carbon footprint, cars, and even Amazon. And yesterday I was reading that Anglo American, the major mining company, will be using renewable hydrogen powered haul trucks in their operations. There is no doubt that companies are recognizing that consumers are becoming more discerning and demanding. Companies and countries alike are looking to bounce back from the crisis, and in doing so, many of them are taking on the green agenda with the focus on climate change and other social issues. There are other trends emerging. Investors are becoming increasingly conscious of environmental issues and are pushing companies to disclose reliable data related to climate change mitigation measures. Renewable energy is getting cheaper. The price of solar panels has dropped 70% since 2011, and many European countries are planning to introduce binding greenhouse gas emission targets. One of the industries at the heart of the climate debate is the oil and gas industry. The industry's operations directly account for 9% of the world's total greenhouse gas emissions, and it produces fuels for another 33%. Therefore, 42% of the world's greenhouse gas emissions can be traced back to this industry, causing it to be the first port of call for those advocating for decarbonization. At the same time, we hear from organizations like the Africa Chamber of Energy saying that we must never be ashamed of supporting an industry that has brought so much to Africa and will continue to bring people out of poverty and reduce reliance on foreign aid. Throughout this webinar, we'll look at not only how oil and gas companies can decarbonize and transition to clean energy. In order to play their part in mitigating climate change to the degree required, it's estimated that the industry will need to cut their emissions by 90%, which sounds quite a lot to me. However, the specific initiatives that a company chooses to follow will depend on various factors such as their location, their asset mix, and regulatory environments. For African nations, the debate around decarbonization also raises some questions which are becoming increasingly important as we approach the UN Climate Change Conference next year, COP26. For example, who's responsible for greenhouse gas emissions? This must be closely addressed in order to help set the direction to fairly share the burden arising from these emissions. We'll also ask how oil and gas companies can support African governments in the lead up to COP26. Lastly, we'll look at the moral argument around whether it can be considered as fair to expect African nations to decarbonize at the same level as developed nations, even when it may harm our plans for industrialization in the future. I'm going to introduce each of the panelists as I ask them to answer a first question. Otherwise, I'll be talking for another 5 minutes and you don't want to hear from me. I'm sure you want to hear from them. My first question is going to be to Giuseppe Valente, who is currently Managing Director of ENI Ghana. He has over 30 years of experience in the oil and gas sector. He joined UNI in 1988 as a geophysicist. He has since had positions in the geophysical services and exploration and production operations for the company, working in different areas of the world. He took on his current role as MD of ENI Ghana after 3 years at the ENI headquarters in Milano, Italy, as Executive President, Geology, Geophysics for ENI Worldwide. Welcome, Giuseppe, to this webinar. Pleasure to see you again. ENI, as I'm sure many of you will know, is an Italian multinational oil and gas company and one of the world's 7 super major oil companies. The company describes itself today as a global energy company that is changing direction to become a leader in the production and sale of decarbonized products. Giuseppe, as I mentioned earlier, this industry, the oil and gas industry, is set to account for 42% of greenhouse gas emissions and may be required to cut their emissions by 90% to meet the targets set at COP21 in Paris in 2015. So from ENI's perspective, as a company, international company also operating in 14 African countries, what more can oil and gas companies do to contain emissions from oil and gas extraction in Africa and accelerate the clean energy transitioning?
Okay, thank you, Ben. Thank you, Rosalind, for the nice introduction. And thank you for the opportunity to be here today to talk about this very important item that is the energy transition. To answer your question, I would need or prefer to have a slide that represent what is going on in terms of change in the organization of ENI, because as you said, ENI is very much committed to be part of this energy transition and be a strong contributor to the limit the effect of our industry on the climate change. Can you see the presentation?
Yes, we can.
Okay. So in this slide is represented the new ENI. The new ENI has as a clear target to be net emission neutral by 2050. This is a very challenging target. Other companies have stated this type of target for the long term, because it is 30 years from now. So, but in order to achieve that, we have to start right away. Actually, we already started, but a big change happened during this year for ENI. You see here represented, apart from the usual support function, a unique technology, R&D, and digital support function that is helping the two main groups that you can see now being the cores of our business. These two groups are one, the natural resources, and the other one is the energy evolution. Natural resources is involving the, let's say, the traditional oil and gas business, but at the same time is in it with the key elements to make the upstream sustainable. What I mean with this, in order to make it sustainable in this business group of the natural resources, we have included also the CCS and CCUS and the forestry in order to make every type of oil and gas project sustainable. This needs to be the full life, and actually before starting any project, we are thinking also ahead and make sure that this can become in the long term sustainable. On the other side, the energy evolution business group is dealing with all the rest. So what is the refining and marketing, what is the production of power, the chemicals, and the renewables. So all the traditional that are going to move quicker and quicker to be more bio product, blue product, and green products, because this is where we're going to be focused from now to the 2050. So with this organization, we are trying to be a leader in the energy transition. So to go back to the target that you were mentioning before, for ENI, in order to reach this target of 2050, we plan to have by 2035 a reduction of 30% of our total greenhouse gases emission that will be reaching the 80% reduction compared to the 2018 reference figures by 80% at that date. Please note that according to the International Energy Agency, in order to be in line with the sustainable development scenario, the reduction of this total emission that includes scope 1, 2, and 3, that is the key point, it should be 70%. We wanted to be above that, and we set this target at 80%. In order to do that, though, you have to be very efficient. So that's why we stated clearly that we're going to be along the same line, reduce our net carbon intensity that takes into account how much CO2 you produce by energy that you actually put on the market in terms of product as well. We will be reducing this net carbon intensity by 15% in 2035 and more than 50% by 2050.
Okay,
so these are the,
you've just got a few seconds more before, so
Sure.
yeah, thank you. Yeah, you can please finish off if you could round up. Then
so I will just go to the next one, and we get to Africa. So Africa for us is key because we are present in 14 countries. We have a little bit less than 4,000 people working in Africa. 80% of them are national locals. And for ENI, Africa is more than 50% of production. So here we have applied since a long time the concept of a dual flag approach. So not only our flag, but the country where we work flag is very important for us. And here is represented just some example of where we have started a few years ago to make sure that our upstream is connected to what comes after it. So the gas to power and also the renewables are becoming more and more important for our business to make it more sustainable.
Thank you. Thank you very much. Thank you very much, Giuseppe. If you could unshare now so that we could, you need to come off. Thank you so much, Giuseppe. Very informative. And we can come back again to that slide on Africa. We have a question about Africa, so you could use it then. So if I may turn to Shamini Harrington now, please. She is the Vice President of Climate Change at CSOs. She has worked at CSOs for 15 years and has been involved in climate change policy development in South Africa since 2005. She's also an experienced international climate change negotiator and represented business on the South African negotiating team at the UN Framework Convention on Climate Change for 5 years. CSOs is a global integrated chemicals and energy company spanning 30 countries and headquartered in South Africa. The company says sustainability has become a major driver in its business. So Shamini, the same question to you. From the CSOs perspective, what more can oil and gas companies do to contain emissions from oil and gas extraction in Africa and accelerate the clean energy transition, which, as we heard earlier, is happening, you know, whether we join it or not. So yes.
Thanks, Rosalind, and morning to everyone. So from the CSOs side, there's a lot that's been going on, and I think I want to maybe contextualize a little bit about CSOs and why it's slightly different to other oil and gas companies. So, like you said, integrated energy and chemicals company. However, we operate a very energy-intensive process. It's the gas and coal to liquids process, and in South Africa, specifically 160,000 barrel per day facility, coal to liquids facility that emits close on 60 million tons from one facility. So it's quite a large emissions profile, and really what we sit with is a very focused strategy to deal with that. So in answering your question, Rosalind, I think we've got to understand that there's a number of complexities that go with that emissions profile, because related to that is a very high employment base. We employ about 27,000 people. So we need to consider how we justly transition. And as you rightfully said, you know, we've done scenario analysis. You look into the future and you see core value chains are not resilient. You see that we are under strain, and sustainability is a key. But to do a sort of sustainable business into the future, which is a future CSOs, we need to take our people with us. We need to take communities with us. So what we've done is we've set targets, but we've done it in a phased way. So we've got a 2030 target that really is focused on at least 10% reduction, largely because of where we operate. As you said, geography plays a key role. We don't have renewables at the scale we need. We don't have gas in the country, South Africa, as yet, in the quantities we need. So we, as a role player, key role player in the South African economy, needs to ensure that we mitigate those emissions, we set targets that are meaningful, and really that people can then follow in the process of transitioning as well. So CSOs transitioning, we've updated our strategy through scenario analysis, we've set targets, and what we are looking at is a future CSOs that is heavily focused on green hydrogen. where renewable energy is at scale, and then transition gas playing a foundation role to allow us to get into green hydrogen as well. So what we are doing as a company is we're looking to unlock at a regional level gas through regional private-public partnerships. We are looking to scale up renewable energy in the country, and then ultimately start positioning for green hydrogen. And for green hydrogen to become economical, we need to have demos, we need to have pilots. So we're looking to partner and collaborate with anyone, quite honestly, Rosalind. I mean, we've got, enough of the panelists here. We're open to have conversations around how we can do this, because it's also about taking the country with us and transitioning the country. So for us, it's about a leadership role. It's about a transformed business, but a business that is resilient into the future. So I'm going to leave it there, and we can go more into it as we talk.
Yes, I'm sure that there's a lot more than we could talk about on this. There's so many aspects, and I'm glad you talked about partnership, because this is not an issue of going it on your own. There's a need for partnerships across the piece. And so we hope to see more of those, particularly as we are coming up to COP26, and very keen to hear what's going to be discussed there. If I could now turn to Rachel Akosua-Entry, who is an environmental and sustainable finance expert. Rachel, I have to say that I'm very jealous of you, because environmental and sustainable finance is something that, particularly sustainable finance, is something that I wish I knew a lot more about. So I'm very keen to hear from you. Rachel has worked for ABSA Capital, which was formerly Barclays Africa Group, and also for Standard Bank in the investment banking area. She also has experience in financial markets regulations and has worked in both London and Johannesburg. She's currently a director at Nuchwa International, I hope I pronounced that right, where she advises clients in South Africa, in South Africa and the rest of Africa on environmental and sustainable finance, as well as on the UN Sustainable Development Goals. She's also an expert reviewer for the UNFCCC climate change reports. Nuchwa International is a climate and sustainable finance advisory firm. The firm has a diverse team of experts with experience in climate finance, environmental social governance, sustainable finance, renewable energy, and agriculture for the financial services sector and capital markets in sub-Saharan Africa. Their aim is to help bridge the gap between finance and climate change, using their experience in both capital markets and climate change. So Rachel, to you, through your work in the banking sector and now at Nuchwa International, who in your view should be liable for greenhouse gas emissions from oil and gas extraction? Should it be businesses or should it be the final consumer? And how must we ensure that the burden is fairly shared? Rachel?
I think we're trying to get her onto this. I think she joined
Oh.
She's listening, actually. We're trying to.
She is? Okay. Should I ask Werner then in the meanwhile, whilst we try to get her on?
Yes.
Is Werner on? I heard him earlier.
I am on, absolutely. I've been listening to you very keenly.
Okay, so let me introduce you first, and then you can speak, and then maybe afterwards we can get Rachel with the same question. But let me introduce Werner. Werner, sorry, I'm going to get your surname wrong. So could you pronounce it for me? Sorry, I'm really sorry about it. Werner.
That's okay. My name is Werner Ayukekba. That's fine.
Ayukekba, thank you. So Werner is the Senior Vice President for Public Policy at the African Energy Chamber and a director with Johannesburg-based DMWA Resources, where he heads the firm's energy and financial services consulting practice. He was recently the principal analyst for Sub-Saharan Africa at IHS Markit on economics and country risks. The Africa Energy Chamber describes itself as the voice of Africa's energy sector, shaping the continent's energy future by promoting growth, fostering collaboration, shaping policy, and providing leadership and guidance in the sector. Werner, the Chamber's recent Africa Energy Outlook report had some very strident messages for investors in and operators of the oil and gas industry on the continent. It strongly advocates for a focus on natural gas to expand market opportunities. I quoted earlier from your chairman's introduction to the report, and just to add that he went on to say that the oil and gas industry is a force for good, and we must not join forces with those that want to demonize hardworking people whose only crime is to work hard and play by the rules and embrace hope rather than fear-mongering, and embrace economic empowerment rather than development aid. So with that in mind, and the fact that there's a need to reduce greenhouse gas emissions, who would you say should be liable for such emissions, and how do we ensure that the burden is fairly shared?
Thank you very much, Rosalind, for the introduction. Just to go straight to your question, I think we are all liable. We should all be liable. In terms of who's been paying for the past 200-300 years since coal became the key driving fuel for industrialization in the world, everyone has been paying. It doesn't really matter if at all you benefited from the light, which was being produced from the coal that was used to push the mills in Manchester. We were all paying. We just didn't see the benefits of it. And so the question about who should pay, I think overall, globally, everybody's liable to pay for what is being produced. I mean, you spoke about the chamber in terms of what we advocate for. We agree. There is a need for transition. There is a need for energy transition. We absolutely agree. We like what we see E&I doing in terms of moving and taking into consideration other forms of energy generation. However, we do strongly advocate that transition in America cannot look exactly the same like transition in Ghana. I'm calling currently from a beautiful country in the middle of Africa called Niger. And one thing I would tell you is that in Niger, in the urban centers, there is an energy penetration electricity of about 15%. And that's for those who can have a couple of hours of energy. Now, in the rural areas of Niger, that's even under 2%. Now, yes, green energy and transitioning from coal and dirty fuels to clean energy is good. But what is also good and what Africans also want is access to energy, and also access to reliable energy. Those are as important. And in some of the rural areas of the places in Africa that we visit and the stakeholders we talk to, it is even more important, I would dare to say, as energy transition. And so we would want, as people, Sainsbury's and all those companies that put the premium on transition and go out there, that we, the African Energy Chamber, also seek to speak for those who can't speak for themselves and who are on the continent and are looking to also meet their aspirations, being able to access energy in the way that others have accessed it for hundreds of years and are likely to, even in the new dispensation, access it. And so for us, it's very important to take a back step and look at transition and make sure that transition works for jobs and for everybody who is on the continent.
Thank you very much, Werner. And actually, I think we're finding that consumers themselves are, maybe, I don't know so much in Africa, but I think I'll say globally, are leading the charge in determining where the cost for emissions should lie in the choice of products and the choice of services and the choice of companies, as we can see. So I think you're right. I think it's something that we are all responsible for and all have a part to play in. Business, government, individuals, I think we all have a part to play. I completely agree. Ben, is Rachel on now?
We're still not getting it. I thought we saw a different Rachel, so maybe we can move on.
Okay. So, so our next question is linked to the first that I asked, and that was of Giuseppe and Chamonix. But I'm going to give them another opportunity to come back and elaborate, as they only had such a short time to share their thoughts. And so the question is very specifically, what does clean energy transitioning mean to oil and gas companies? And what are the investment implications of adapting to climate change? So maybe if I could ask Giuseppe to go first, and then Shamini, if you have something to add. And actually, Werner, if you also have something to add, please come in.
I always have something to say.
I know you always have something to say.
It's just not enough time.
Don't worry, I think we will make the time. But if I could ask Giuseppe first. Giuseppe, so focusing specifically, and you know, and it may be that you could even again talk to the Africa continent specifically, as our audience is particularly keen on that. But so what does clean energy transitioning mean to ENI or to your other sister company, you know, the other oil majors, and what are the investment implications of adapting to climate change?
Yeah, thank you, Rosa. Yeah, I think that I would go back to what I was sharing before, because it helps to be practical in our discussion. So I'm not able to share it anymore. But anyway, so let's start from what we have been doing in Ghana. I think is a key example. I mean,
Giuseppe, can you not put the slide back up? Are you not able to put that lovely? No, so sorry.
Now I can. Yeah. Now I can.
You can. Yes, I think it'll be.
You just a moment. You should see it now, right?
Yes, we see it now. I think it's nice to have a look. Yes, please continue. Yeah.
So as I was saying, we are in 14 countries. Some of them we have been there, like we mentioned, North Africa. We've been in Libya and in Egypt for 50 years or more. Nigeria and Angola for a very long time. Actually, Congo longer than Angola. So, but there we started with the traditional business, but these are also countries where we started the transition. It means that we started thinking about with this, starting from the beginning of 2000, to reduce and put clear target in reducing the flaring, in reducing the impact to the environment. But at the same time, we have been focusing on giving access to energy. And here I'm connecting to what Werner was mentioning. This is key. For us, being in a country means to make sure that the energy that is coming out of that country is given to the country first. So to go back to the clear example of Ghana, we have been here for not long, but we started along that direction. Because the key project we have, that is the OCTP project, is an integrated project. So there is a oil reservoir mainly and a gas reservoir. What we are producing from the oil that is used for the country, but sold most of it outside, the associated gas is completely injected into the reservoir. So there is no gas flaring associated to that. The non-associated gas is directly sold into the country for the power generation. So there is no waste of what is coming out of the subsurface. And is generated presently in 2020, almost more than 50% of the energy, electricity, is generated by this gas. So since we started the production of gas 2 years ago, but it will be more than that now, the production of electricity from liquid fuel has been reduced more than 50%. This translates into a clear reduction of the CO2 emission. So we are not leaving the key business, but we are making it more sustainable, because producing electricity with gas, it means a reduction of 30% of your 25–30% compared to using liquid fuel. So this is a clear example of what we have been doing in Ghana, starting, I would say, on the right step, because we have been here only a little bit more than 10 years. But this transition is clearly declined also in Nigeria, in Congo, where we are part of the grid. We restructured the power grid, and we are part of the generation of electricity. What we have in Nigeria is about 20% of the electricity need, and in Congo is up to 72% of the electricity need, still using the gas that is produced in the country. To go further, for Angola, we started not only taking care of the gas, but also a big project for a photovoltaic plant that is starting as we speak. It's going to be a phased project, but in terms of investment, it's going to be big because it's going to be 50 megawatt that is going to be available in 4 years. So this is something that goes from traditional to transition, but keeping the core of the energy always the same, on the oil and gas, more and more gas, because that's what we need, really.
Okay. Thank you very much for that. Shamini, is there anything you'd like to add? Giuseppe, if you could come off. Thank you very much, Giuseppe. Shamini, anything to add?
So maybe Rosalind, from the South African focus, I think for us, I mean, we all know the dynamics we're working with in terms of South Africa, very low economic growth, very, very high poverty levels, unemployment. It's similar to many other countries on the African continent. And for SASOL, our clean energy transition is to make those stats look better. We want to be able to contribute to employment positively, more so than we do today. And we're seeing through work we've done internally that renewable energy and the manufacturing of solar panels, wind turbines and all the parts to go with that, and having the full value chain in the South African economy is the way to start this clean energy transition. Also, something I'd like to add is that SASOL, given our Fischer-Tropsch technology, we are already producing grey hydrogen. We, I think, 2 global production of hydrogen already. So we're in a prime position to be able to get into the space of green hydrogen. To do that, we need renewable energy, and we also need a baseload power and a feedstock that is low carbon, which is really where we come with gas. And so we want to be able to be the company that unlocks this. We want to lead in the South African economy. We want to transition the country. And to do that, we need to get right those technologies. So for us, clean energy really starts with renewable energy. This year, we really came out with our 2030 roadmap, which is a sort of map of how we want to get to 2030. Next year, we've got a Capital Markets Day, and we want to come out with our 2050 target, strategy, and roadmap. And linked to that, we're also looking at Scope 3 targets. And you asked the question earlier, and I thought I must get in 2 words here around Scope 3. And, you know, the conversation about who, you know, where does the burden lie? And I completely agree with Werner. I mean, at the end of the day, we sit with a situation where we put certain products out. We put emissions out, Scope 1, 2, and 3, and we need to acknowledge that we have responsibility to do the right thing. So for SASOL, it's about looking at all 3 of those emission sources, and we've put out a 3-pillar emission reduction framework. And the reason why this is important is that we see this as a transition phased, and we want to use our current kit, reduce emissions there, use the sort of know-how about that plant. I mean, people want to know how we operate this very huge facility. We want to use that learning to then transform the facility through gas, and then shift our portfolio. And by shifting our portfolio, we want to put products out into the market that are sustainable, that are needed by the African continent. We want to put those sustainable products out there. So clean energy, reliable energy, mobility. How do we look at jet fuel that is green? How do we look at green ammonia and how that can play a role? And these are all resources that are very much needed on the African continent. So that's a little bit of taking the story a little bit further, but I really think the partnership angle is the way to go. Thanks, Rosa.
That's right. It's interesting because just to say that some of the, you know, I love collecting stats, but one of the stats that I've picked up is that so far the investment by the oil and gas companies outside of their core business areas has been less than 1% of their total capital expenditure. Leading businesses are spending around 5%, but this is still far below the total requirement that's needed. So, you know, I'm not asking you to divulge any, but for SASOL, are you in that range? I mean, in terms of your total investment, because I think the question was about what level of investment would be required. So I just was quite interested to hear. Yeah.
So, a good thing you asked that question. I actually forgot to say, so when we put out our roadmap this year, we actually released some stats around the capital expenditure that's relating to phase 1 of the roadmap, which is 2020 to 2025, which is about 500 million. And then post that, rands by the way, post that we're looking at about approximately 11 billion. And that doesn't even take into account the gas pipeline that we're looking at. It doesn't take into account the transition post 2030, which would be much higher than that. So the transition is not something that would come cheap. We didn't expect it to. That is a pre-feasibility number, Rosalind. So we are looking at mechanisms and ways to reduce those costs. But of course, it's something that we have to then put against and compare against the earnings lost for a company like ourselves into the future. And I mentioned scenario analysis, and that's something I want to urge every company on the African continent and even abroad to be doing, because it really does put into perspective what the money you're spending on now could mean into the future. And for us, we did some scenario analysis, and that earnings impact was more than 50% had we done nothing. And the moment you put in targets and look at this kind of cost, you have savings of 20% on your earnings into the future. So just something to put that into perspective and what it actually means for a future company like ourselves.
Okay, great. Thank you very much. I don't know who's, am I pinned on, I'm seeing myself pinned onto this thing in a static mode. Can you see that also, Shamini? Is it just me?
No, I'm seeing both of us. I've got both of our pictures there, so I think it's just you.
Okay, fine. It's just me. I'm just looking a bit at myself, looking a bit odd. But anyway, let's move on. Werner, I'm just conscious of time, so I'm actually going to ask you the fourth question rather than ask you to comment on this. We can come back to this later. As the voice representing stakeholders in the oil and gas industry in Africa, broadly represented, including governments, Giuseppe and Shamini have shared their thoughts. And for you, what I would like to know is, how do you think businesses can support African governments in the upcoming negotiations at the 26th session of the UN Climate Change Conference of the Parties, which is going to be held in 2021 in the UK? And before you respond, I just thought it would be a good idea to summarize the proposed agenda for COP26 so that we know. They're hoping to agree a balanced negotiated package that delivers the Paris Agreement and moves the UN climate change process forward. I think they make this at every COP meeting, but this is something they would like to do. They want all countries to commit to reaching, and this is all countries, which is very interesting, to reaching net zero emissions as soon as possible and to have significant further cuts by 2030. They want to step up and help societies and economies adapt to climate change, particularly the most vulnerable. They want to turn the corner on polluting energy systems and seize the opportunity of rapidly falling cost of renewables and energy storage. They want to accelerate the transition to zero carbon transport, phasing out petrol and diesel engines, and to accelerate the green transformation of the financial system so that all countries can drive clean and resilient investment, and also to harness the innovation and commitment of all citizens, investors, businesses, countries, cities, and regions to move the global economy to net zero. So I would also like to remind us that during the COP25 negotiations, African countries raised concerns about both the aim to cut emissions and the climate finance gap. So with that backdrop in mind, very keen to hear from you, Werner. And if Rachel is on from her on how you think businesses can support African governments in preparing for the next COP meeting.
Thanks, Rosalind. I'll just dive in straight into that. Now, listening at the agenda, I'm not very sure how many African businesses had their input in getting that agenda going.
Businesses or governments?
Businesses, governments, absolutely. But I'm not very sure how many African businesses had their voice into setting that agenda. Very, very aggressive targets around decarbonization, which is all good and fine. And so I relating back to your question, I'm very happy about the fact that African businesses potentially have the opportunity now to influence their own governments as to what positions they need to take with respect to the discussions that are going to happen in Scotland. it's quite important that some of these recommendations and everything are very economic in terms of being able to be business-wise realistic. So they need to be able to stand the test of the market. If they don't, and we think that we are going to subvention African efforts in that sense to be able to meet those targets, I think we'll be missing the point. We need to be able to carry African businesses, the African reality around a quest for industrialization to make sure that people can have jobs, being jobs, and jobs that are actually economically viable in that sense, for it to make sense for us. So what I would be telling African businesses is to make sure that they clearly highlight the need for, in some areas, in the Niger Delta, for example, the need for an industry to exist, to continue existing. But of course, for the industry to be able to clean itself. We saw some of what Giuseppe was talking about with respect to gas to power. Now, there's a lot of flaring going on. There's a lot of flaring going on in Africa. And if at all some of that gas can be captured to be able to, at the end of the day, of course, used to generate power, then we are doing two things at the same time. We continue to provide an economic opportunity, but also we continue to move towards a greener environment in that sense. And so it is not something we need to be ashamed about to say, yes, we do understand that, but as Africans, we as African companies need to be able to put in our voice and say, this is the way we look at it. And there is a way to be able to get onto that. We shall not be able to move at the pace of companies in Manchester, companies in New York. We need to be able to move at the pace of companies in Tema in Ghana or companies in Limpopo in South Africa. If not, we're just fooling ourselves. We need to try and find a way for transition to work for Africa. And that is not handouts. That means actual concrete business realities to be able to match whatever targets that the government is also looking to sign on to. So from us, that's the way we look at it. I mean, one of the biggest problems we have is accessing finance at the moment to start getting onto some of those projects, might be in the oil and gas space or transitioning into gas. But we can see, of course, that a lot of banks in the Western world are closing the door to be able to raise equity for some of those things. Unfortunately for Africans, we do not have the kind of state-owned banks that can subvention some of those projects. If you go to Germany, of course, I love Germany, great country, but you know what? 30% of German electricity is still being produced from coal. Those projects are being financed somehow. This is 2021. Germany has been talking about getting out of coal for the past 50 years. But now in 2021, 2020, there is still a possibility for one to be able to finance coal projects. And so as South Africa seeks to exit coal as fast as they can, it should be on also an economic basis. Yes, we need clean coal. Yes, we need to be able to move to gas, but all of this has to be at the pace that takes into consideration the realities of the populations which we serve, we as the African Energy Chamber. And that's what we simply advocate for. We're not against climate change. We do think it's an issue. We do think we need to work with it. But unfortunately, we do think that the pace and the nature of the discussion, because of the power balance which there is not necessarily always in our favor. And we need to try and always voice that which the voiceless cannot voice because they don't have the podium, which a lot of the other people are going to have in the COP21 conferences and in other fora.
Thank you very much, Werner. I think you touched on a very important, sorry, I keep on touching for some reason, I have to say, if you keep on seeing my hand going towards my screen, it's because my screen keeps on going off for some reason. And but thank you. And I think a very important point you made was about the access to finance, to be able to achieve some of these, to do what is necessary for the clean energy transition. So a very good point there. We've got quite a lot of questions, so I am going to move on to our fifth question. We've got quite a lot of questions from the audience. I want to move on to our fifth question, which I'm going to ask. Sorry, Ben, is Rachel back on or not? Or are we sort of not? I just don't want to leave her out.
We're still able to reach her, so I think we can move on.
Okay.
Yes, sorry, Rachel is back. Sorry.
Oh,
Sorry.
Oh, okay. Sorry, Rachel. Hi. Well, Rachel, I don't know whether you heard the last question and have anything to add to ask about, but there was a question that I had for you. So maybe, hi, Rachel. Sorry, there was a question that I had for you that maybe we can go back to if you might want to contribute to that. Is that okay? Rachel? Hello?
Hi.
Did you hear me there?
Hello, yes, sorry.
Okay, so I mean,
I'm not very well because the internet is acting up. Yes, please say it again.
Okay, I said, so I just want to make sure you can hear me well.
Yes.
The question that I had for you was, and it has been answered by others, so I want to give you an opportunity to answer. I've already introduced you so the audience know who you are, but what more can oil and gas companies do to contain emissions from oil and gas extraction in Africa and accelerate the clean energy transitioning? And we want to hear from you from your perspective as an environment and sustainable finance expert, from very much the financing side of things. And we've had a lot of conversation on other issues, but I think if you could share your perspective, particularly from the financing angle on these issues. Okay, thank you.
Thank you very much. And I may have missed some of the session, some of the answers that people gave, but I want to say that we need to look at climate change from also the financial aspect of it, right? Now, what oil and gas companies need to understand is, yes, especially in Africa, we're not responsible for climate change. I mean, we only emit, just about 4%. But the reality is, as the world is transitioning, right, we're trying to reach, we're trying to be net zero by 2050. What will happen is that they're going to end up with stranded assets. Stranded assets are banks and institutions are no more going to be funding fossil fuel companies. And the risk is that climate change is a risk to the financial system. Now, if the company is going to be financing a fossil fuel company, they stand the risk of, the market risk, credit risk, and all other types of risks that they will suffer by investing in fossil fuel companies. So over and above what we're saying that, not just about decarbonization of their existing operations, but what oil and gas companies need to do specifically is one, to divest their businesses, divest and invest in other resources that can help them to remain profitable as the world moves to net zero by 2050. A second thing is that they have the solution to solve this problem. They need to be able to invest in carbon capture storage. And carbon capture storage is just basically investing in the technology that allows them to remove the CO2 that they emit into the atmosphere and store it underground. This is an extra thing that fossil fuel companies can do. We do understand that in Africa, we need fossil fuels. We need to rely on fossil fuels to develop our economies. But the risk that we have to face and understand is, right, the market is going to punish companies that fail to get ahead of the curve. And by getting ahead of the curve would mean investing in the right technology to capture the CO2 that is emitted into the atmosphere, diversifying the business operations to ensure that companies do remain profitable. Because as you see now, without taking into consideration some of these risks that they're going to face, the markets will punish fossil fuel companies. When they start pricing in the risk of climate change, you're going to increase your borrowing cost. And that would mean that, you're going to devalue your value, you're going to devalue your company assets as well. So it is important that over and above the decarbonization strategies that they're implementing, whether it's, planting trees and all, that is a very minute aspect of solving the problem. The biggest aspect to solve the problem is to go over and above that by investing in carbon capture technology. We know it is expensive, but we know that the fossil fuel companies have a lot of money that can solve this problem. And it shouldn't be left to citizens to pay for it because it's something they can do. Failure to do it you're looking at market liability, you're looking at legal liability, and all sorts of risk for the business itself.
Okay, thank you very much. Unfortunately, you'll be pleased to know that none of our panelists, Sasol and ANI, who have big plans for this, were planting trees. I'm sure they plant a few, but it was not the main source of their energy transition plan. They've got very big plans. And I would encourage people, actually, I mean, I think a lot of the time we see reports from companies and we look at the cover and don't, but these days, these reports that companies are putting in have lots of detail and information and are actually quite educative. And I would really encourage people to sort of read the reports that are coming out from Sasol, ones from ENI, and particularly more recently, the Africa Energy Chamber has put out an energy outlook report, which I'd encourage people to read. I'm a great reader, and I think as Africans, we should do a lot more reading, if I may say so. Yeah.
I see, Rosalind, if I can say that, I see that. I know they're not just planting trees, but whatever they're doing is not enough. And as you've seen in the media, you've seen everywhere that we're all talking about from, it is not enough for us to be able to, to meet the 2050 goals. And it's also not enough to understand whether they will be profitable in 2050 when we have to reach net zero. So there's a lot more that needs to be done. But fundamentally, if we are not really capturing what we're putting in the atmosphere, if your business plan is not financially showing how you mean to survive by 2050, then you're not really doing enough. It doesn't matter the solutions that you put in place, decarbonizing. Decarbonizing, the ultimate solution is capturing what you emit and then storing it under the ground. That is the biggest solution that we found at this moment. So until they invest in that, I don't think we're really going anywhere.
Okay. I wondered either, Giuseppe, we don't have a lot of time, but I'm very keen for Giuseppe and Shamini, if you have something to come back on to Rachel on this. Is there anything you want to add? Otherwise, we'll move on to the fifth. Yes.
So Rosa, maybe I can. So yeah. Rachel, I completely agree with you. More needs to be done, but you need to also recognize that the transition path will be very different for African countries. No matter what you do, the infrastructure does not exist. It will take 10 to 15 years to construct a pipeline. It'll take more than 20 to 30 years to get CCS off the ground. I can tell you, because Sasol's been involved in CCS since as early as 2004, we are still trying to get off the ground a commercial pilot project. We haven't yet been able to get past the EIA process and the public participation. We've identified the sites for CCS. It still is nowhere near we need to do in terms of being 100% reliable in terms of the geology. We have no idea. So we need to get past all of these hurdles to get there. And where I do agree with Werner is that the financing, the technology, the capacity building still needs to be supplied from developed countries that have done this, taking account of the national circumstances that we operate with, because it's all good and well to say, here's the technology off the shelf, take it, use it as is. It doesn't work like that. There are a whole suite of cultural, legal, regulatory, I can list the laundry list of things that still need to be done. But having said that, where I do agree with you, the end point will still be the same for all of us. But will we meet 2030? Possibly not. Maybe 2035. 2050 is certainly the end point that we all have to be at in terms of a sustainable business to ensure we get to net zero. But we need to recognize that the little parts that we take to get there might be very different to a developed country.
Okay.
Thanks.
If I may add a comment, Rosalind and
yes.
Rachel, yeah, I think that I would look at example. I like to do that honestly. I mean, ENI has been starting the project for CCS in Italy, where it's barely possible to do any oil and gas business, because you can imagine now is tourism the key economical input. Nobody wants to have wells drilled, but the CCS now has started as a project in an area that has been for the second part of the last century key for producing gas, that is the Adriatic Sea. So there we started a CCS project that is going to have a pilot going on in the next year to prove that, as you said, if you don't capture the CO2, you're not going to reduce it, because we need to produce the energy. So you have to start from capturing in a serious matter. So why is key to show this example? Because in countries where the resources are very poor, like most of Europe nowadays, the CCS is going to become key. I don't think this is the case for Africa in general, because we still have huge resources. The matter is how to get them out of the subsurface in the right way, not as we used to do it, but how we can do now. So don't leave the gas there, use it properly, and use more gas than other fossil fuels. That's the key point. Then when we will be in 20, 30 years from now, we will start talking about CCS also in Africa, I think. But nowadays it's very, very early stages, because you still have to produce it. So the reservoir to store the CO2 is not the best solution at the moment. So you have to postpone these actions for the future. And it's worth mentioning also that if you look at the CO2 emission, Africa is contributing as a continent less than 4% worldwide, compared to Asia, that is almost 50% of the CO2 emission. Europe and North America are less than 20%. So this to say, you have to put that in the right framework to understand how you can act. So in my opinion, who is the cause of this huge emission has to take care first, and then the other. But everybody has to contribute in order to reduce the impact early on, to be efficient, to diversify the resources, and in order to be able to contribute seriously on the transition to a better energy.
Fantastic.
Thank you very much. Thank you. We've got quite a few questions coming in from other participants from the audience, and we just have enough time to deal with them. I know we could go on having this debate amongst ourselves, but I think it'll be unfair not to try and answer some of the questions from the audience. And then, if there is time, we can come back on this. Unless it's a minute you have to say what you've got to say.
Yeah, I think it's just a minute, and it just summarizes everything. That I understand that you're doing a lot, but what I want the fossil fuel companies to do is to develop a plan, a proper sustainable plan that ensures that your business will survive by 2050 financially, right? So if you have a proper financial plan in place that ensures, that takes into account the risk of climate change, then make sure that your business will survive, that investors will not lose money by investing in the business, that, you know, banks that are financing whatever infrastructure you have are not going to lose money. I think that is the fundamental thing, that with the plan that you make, just also make sure that.
Rachel, thank you very much. I think, Ben, if it's okay, we would now like to move on to take questions from the audience. I've got a few here. I'm just going to choose some of the panelists. The audience members have chosen which panelists they would like to say. But I want to start with a very interesting one from, and I'm just bringing it up, from Horen Kwashiga. He asked the question, what options are currently or potentially available for alternative use of fossil fuels when we reduce their usage in our energy mix? Is it possible to make the use of fossil fuels more environmentally friendly? This is in view of the position of some that they provide Africa an accelerated path to economic development. Now, I didn't ask my fifth question, which was sort of on this line. So I just wondered whether, and I don't mind which one of you will take it, but what options are currently or potentially available for alternative use of fossil fuels when we reduce their usage in our energy mix? Maybe I will start with Shamini first, if you don't mind. Is that something you could do? And then Werner.
Yeah. So, Rosalind, I think one of the things that we have to bear in mind is that in combusting a fossil fuel, you will get harmful air quality pollutants as well as greenhouse gases that you cannot avoid. So in terms of using it in a more friendly way, Rachel is 100% correct. What you need to do is have some sort of CO2 capture, because if you're going to use it, you need to not emit those gases, whether it's greenhouse gases or air quality. However, there might be another option in terms of utilization. If you're going to burn it, how can you then utilize the CO2 into something that is value adding? So we as a company are looking at CO2 to chemicals, CO2 to fuels as well. So if we have such a large emissions base, which is, you know, a very, very large emissions base of CO2, how can we use it for something else? And CO2 to chemicals is something that's really, really viable for us. So we are looking at opportunities in that space. Again, really in its nascent field. I mean, it's really small. It hasn't gotten to the level we need, but certainly holds huge opportunity. So it's not just storage, it's also utilization that we're looking at. So those would be clean coal options for us as we transition, but we have to accept the fact that fossil fuels will have to come down. You just aren't able to then get rid of that much CO2. Yeah.
Okay, thank you. Giuseppe, anything from you on this question?
Yeah, I think that this is a very important point, because utilization, we haven't talked about that, but is one of the things where ENI has been investing a lot in terms of R&D, because at a small scale, you can actually utilize CO2 in very different ways. We have projects that have demonstrated to us that it's possible to use CO2 with biocapture of CO2. So you are able to grow plants using CO2. So you can use it on a small scale as well as on a big scale. But these are all projects that needs to be industrialized, so to have the proper implementation, but this is feasible. So this is a way that looks at the continuous use of fossil fuels. So you can still burn diesel, but you're gonna capture CO2 that you produce to, let's say, to have your greenhouse growing better because you have CO2. You have to remember that that's the way plants, our forestry is living out of. So CO2 is everywhere. It has always been there. We just created more than what we needed, but it's part of our environment, okay? The other point is that from an industrial standpoint, CO2 can be used, and this is always part of our R&D, to get special cement mix that are very efficient. So investing in R&D to understand what is a better utilization of the CO2 is going to be key for our industry, because it's going to open up all new kind of businesses that we have not been involved so far, because to be honest, we have not been careful enough to take care of the CO2 that we produce.
Okay, thank you very much. I'm going to move on to another question, and maybe for Werner. From Opong Mensah from Human Insights, his question is, do companies in Africa's oil and gas industry plan to have a greenhouse gas reduction plan by Q3 2021? But I think it's more the second half of the question that will it be a good idea for African governments to require that there is such a climate action plan in place? And then how will the plan be enforced and audited independently in Africa? I think this is an African Energy Chamber question. Did you get that, or should I?
The question is premised on a whole bunch of things which I couldn't put my hand in the fire for. The availability of, an Africa-wide kind of an agreement around that, the availability of institutions to be able to evaluate and then audit and then for some reason move. So there's a whole bunch of things, but at least the intent of the question to be able to say, are we prepared? Can we put in some preparation, and can we hold the government's feet to the fire with respect to some of those plans, agreements around getting companies ready for that is important. And I agree that we need to try and see how we can get African governments to be proactive in terms of getting their economies ready for all what is happening around us. I might not agree with the pace at which it is happening, but it is happening in that sense. And so for us, in essence, in as much as I understand what Rachel says with respect to companies getting ready and making all of those plans, I do have the impression that some of that is geared towards the bigger boys, people like Giuseppe and he and I, who can pretty much afford to do those plans and make them. I'm not too sure about mid-sized companies in the Niger Delta, for example, who are service providers to Giuseppe, to be able to get those plans going, and those are where the jobs are. So for me, when I hear that, I'm like, how does that translate to a 10-man, 20-man company which provides services to CSOs? And I'm not sure that they can afford it, because they move on from pretty much from paycheck to paycheck, and pretty much have difficulties in being able to keep the businesses as they are, even including in a post-COVID environment. So I would always try and say governments need to take a step back. African governments, I can't speak to American governments and to European governments or whatever. I would always say African governments need to take a step back and be protective of those mid-sized businesses that operate in these sectors. They have a duty to protect those industries. And in as much as there is transition that is coming, that is a reality in that sense. They are now moving in and are being asked to sign on the dotted line, COP21, which is coming, and all these other conferences that are coming, because Western nations, I would put it that way, also need them to sign for it to be a general thing. I would suggest that they think for once to be able to kick against and to say, wait a minute, we can't create an environment where projects in Africa, in a place that provides just 4% of decarbonization, are no more financed. So we need to change the narrative. It needs to be some kind of a narrative that takes into consideration African realities. If not, it's not working for us. And if it's not working for us, we don't want our governments to sign on the dotted lines, because we need to look out for mid-sized companies, like I said, in Tema, giving services to Giuseppe, and those that are in Johannesburg, South Africa, that give services to SAS and Samini. And so for us, that is where we stand.
I want to bring Rachel in here, because, you know, I'm always very interested in this, that I think something she mentioned is the need for companies to have a plan to show their investors that they'll be around in the future. And the question is, I mean, we are seeing that investors are sort of voting with their money, basically, as to where they'll put their money. Let's remember that the dollar just wants to see where it can be best multiplied. Rachel, I'd like you to come in response to this. What, with the idea you have, I mean, you're very passionate about companies having to do what is necessary in order to bring about this the clean energy transition. But to Werner's point about what about the mid-sized and smaller companies? What is your view on that and your perspective on that? Yes, I prefer this look so I can see everybody. Yes, Rachel, please go ahead.
Yes, so I understand that
they can't do carbon capture, so that's
I understand it, but we all know that investing in something and developing it, once it becomes a market commodity, once it becomes available to the market, it will reduce the prices, right? So as much as we know that not every company can invest in it at the moment, what is important now is for some of the big emitters to actually lead in the development of the CCS, right? And that is what we're finding, that there haven't been any as much money thrown into it for the agency in what we are facing. So that is what we say. I understand the medium-sized companies will struggle, I understand that, but the biggest solutions lie in those who can afford it, the bigger companies that can afford it.
But I guess, Rachel, let me stop you there. I think that point has been clearly made, and I think the point that is being made now is that the big companies are not the only players. And basically what is being said here, and I think, Werner, please correct me if I'm getting you wrong, that whatever the big companies do and wherever they move, there's a whole bunch of other businesses, particularly in Africa, who are reliant on the services that they provide. And you know, and I know, because I've been in the industry too, that a lot of companies in Africa are now investing in the sort of services that are being given to companies where they stand, the oil and gas companies. So when we talk about them sort of moving out of their core business, which is what I'm hearing, and I'm an arbiter here, I'm not making a decision, making a point either way. The question is, what role is there for our African companies, the majority of them in the industry, and how are we looking for their survival?
So you mentioned one important point.
I add one thing there, and no pun intended, but like I said, Giuseppe and other majors can take care of themselves. They have a whole bunch of experience, cash, and everything. The guys I'm talking about are moving from paycheck to paycheck, and I need to be able to voice what they tell us, what they see, and what the market realities are for them on the African continent.
For Rachel, to that, if you can, I mean, if you have a view there.
So first point which I'd like to address is you mentioned that, you know, you said something about them moving away from their core activities. We're not asking the small companies to move away from core activities. I absolutely agree. The fossil fuels are important. What I am saying is that we become aware of the impact it's going to have if we start transitioning from it. So for example, for smaller companies, if it is money that is required, if bigger companies now start investing in the right technology, it helps the whole industry, it helps the whole country. So I won't say the smaller companies, maybe they will get funding from other institutions to be able to develop their own, but I don't think that is necessary for smaller companies if they just provide a service to fossil fuel companies. What you need to understand is what is important is what happens if we do not do something. Now they will lose their livelihood if the assets of bigger companies like E&I become stranded or SASO. What then happens? Because then you do not have the revenue that you were banking on. So that is the fundamental thing that we're saying is, yes, the bigger companies need to come in and do something. The smaller companies rely on you. But imagine if you do not do something, you are going to lose the revenue in any way. So that is, I hope I have answered it by letting you understand that what we're saying is that failure to do something will mean you will lose your revenue. For the smaller companies, it is important for them to understand that we're dealing with stranded assets. Who's going to finance these big energy companies to exist in 10 to 15 years' time? We already know that their pricing, if you look at the market pricing and look at investors now, they're already complaining about it. So yes, I'm not saying we shouldn't invest in fossil fuels. I'm not saying we should do away with fossil fuels. That is not my message for everybody. My message for everybody today is we need a plan. And the plan may be enforcing or getting the bigger companies to invest in it for maybe countries. You don't need every company to invest in fossil fuel perhaps, but if they put the necessary money together to be able to build the right technologies, maybe we can just emit it from wherever we can in a much better solution. That means you ensure the existence of the company.
I think the message you sent is loud and clear, and I'll get into trouble if I don't ask the other questions from the panelists. Giuseppe, there's a very interesting question from someone. He says, or he or she, are companies willing to share your simulations, detailed plan about the transition with African governments in the interest of transparency and well-being of a society? I think you are sharing your plans, no? Maybe.
Yes, we do. I mean, then every country does follow a different strategy because every country has a different situation. I mean, certainly I'm hearing what Rachel is saying, but one thing is to talk about Nigeria that has been producing since the 50s. One thing is about talking for Ghana that has been producing for 10 years. So you don't have that weight in terms of infrastructure that needs to be taken care of. So it's a very different situation that we do and share with each country based on what is our plan. If we wanna stay in the country, we have to make it positively on our balance sheet, right? So we have to find solution in order to make this work. If it works for us, it works also for the medium and small size company that are actually making our business in worldwide, but in Africa specifically, efficient in terms of being quick on the territory, being cheap as well, because we cannot always use the top company to do things that are actually feasible by a properly trained person on the side. So I think here we have to bring in two elements. One is the economic diversification in order to be able to do not only oil and gas production, but also the rest. And also to make sure that what we do locally is capable of growing by himself. So if you do offer, as we are doing in all the countries, offer economic diversification, training, and conditions that are locally establishing long-term economic sustainability, that's key. That's key, because it's not only oil and gas business that you are talking about, it's economy that you are talking about. And to run the economy, you need all the aspects.
Okay, thank you. Giuseppe, there's another interesting question which sort of linked to something that we've just discussed. And the question is from Manuel Ford. From an operational point of view, how are you collaborating with drilling contractors and service companies to assist you to meet your climate change targets?
Yeah, we have to collaborate with them. We started years ago to do that because we need to make sure that they run with us operations that are as efficient as possible. Drilling a contractor and all the contractors that are helping us in our operation are part of the scope 2 contribution that we have in this CO2 emission. So we need to be very close to them, and we are at the moment. So we try to establish stricter and stricter technical specification to make sure that when they burn to generate energy for the rig or for the plants, they burn the best diesel that they can, and they use the best generator that they can. So this is the way we work. But let me say that based on the analysis that we have done, and I don't know if everybody's aware of that, but the contribution of operation like drilling or running a production facility, the contribution of this operation to the CO2 emission is minimal, is order of magnitude lower than what it is to run a refinery or actually to transportation. But still, we have to take care of that. But this must be stressed. When we do drill, when we do produce, our emission of CO2 is very, very low compared to transportation, container transportation or road transportation. You talk about 2 or 3 orders of magnitude lower. I don't think a lot of people is aware of that, because it looks that all the dirt that we create is generated by when we drill a well. Actually, it's very minimal. Given the modern rigs that are used today, is very, very low, the production of CO2. And also what do you do when you produce it? CO2 emitted is very low. It's when you use it that you do a lot of damage.
But I guess, Giuseppe, that's the issue that has been brought, that yes, it may be low in your direct operations, but you are producing the fuel that is used by...
Yeah, but you can produce better fuel. Yeah. You can produce biofuel together with it, and you can produce a very efficient fuel. That's the change. So let me give an example. We started business actually in Ghana in the 60s, building a first refinery here that is still working nowadays. Certainly that refinery, I guess, is not at the top of the technology to produce the kind of fuel that you need in this century. So that's where you have to start. And that's why we decided, like Eni in Italy, to transform all the refineries that we had from the 50s in biorefinery to produce green products, because these are the key steps to take in order to be able to reduce your scope 2 and scope 3. Otherwise, you won't get there. If you don't change, you don't get there.
You have to. Okay, thank you. We have just very little time left, so and we still have a lot of questions. And actually, there's such good questions that I'm going to suggest to ACEP that they do send you the questions. That we send you the questions, and you send in your answers, and they send it back to the people who asked them. Unfortunately, we don't have time to go through all of them. I want to give time, a minute, to each of you, just to give your final thought, remembering the audience. I'll just give you a taste of some of the questions that have come through. Somebody has asked, for example, what role do national oil companies have to play in the decarbonization or energy transition journey? Someone else has asked that, sorry. Yes, so, and I think that was an important one. So someone asked that, how should African governments respond by way of policy or legislation to this new green technology approach planned to be adopted by the oil and gas company? Another person asked that which is primary, for African countries, which is primary in our transition, investing in technology that will make conventional dirty energy conversion process, which we have 90% dependence on green. Sorry, it's a very, I think his question is, should we be focused on technology that converts dirty energy, or focus on sustainable, investing in new technology? I think the answer is obvious, so, but he's asked the question. And there was another one, which was for Rachel, that considering CCS is not fully developed, especially in Africa, and relies on geological formations, do you think it is something we should rely on, considering the technology is not fully developed? And I think this is what I want to say. We haven't talked about carbon tax. So he's saying, I think carbon tax is what will inspire innovation in the oil and gas sector and push them down to cut emissions. Having said this, I'd really like to know what oil and gas companies think about carbon tax. So sorry I raced through it, but those are the sort of general things. So please, a minute each, because we'll be kicked off anyway. So a minute each, and then I will summarize. I'm going to start with the passionate Rachel. 1 minute, Rachel. Don't mention CCS. Try not to mention CCS in your last minute. Okay.
Thank you very much. Not about CCS, but carbon tax is quite important. And because, climate change is a market failure.
Could we have Rachel on, please? Could we have her photo on so people can see how she speaks? Sorry, whoever's organizer. Rachel, please go on. Sorry, go on.
Yes, so as I was saying, climate change is a market failure. And so one of the advocates is to implement carbon pricing as a tax system. And carbon pricing is good and is effective, but it's not enough for us to reach where we want to reach. For example, I've been on a lot of talks with the World Bank, with the Carbon Pricing Leadership Coalition, where, for example, in South Africa, they're implementing a carbon tax program, but it's not that extensive in all other African countries. We are working on it. It's not a few solutions. You see what I mean? What we need to do is to do more than that. Carbon tax is just one of it. I agree with you, but we need to do other things as well.
Thank you very much. Giuseppe, next, your minute, please. What would you like to say to the audience to conclude on this?
I think that, yeah, on the incentives that the government...
not on carbon tax. This you can talk about anything you want. Yes, go on, yes.
I think that in general, each country, in Africa specifically, because it's important to have the economy running, incentive in all kind of investment that are done in the country needs to be properly taken into account in order to have tax holidays or things like that, in order to facilitate the investment that must not be only related to oil and gas, not nowadays, not anymore.
Mm-hmm.
So it's very important to approach the oil and gas company as energy company, and with companies that have a lot of capabilities, not only for the upstream, but for all the rest, because of their organization, of their strength, of their technology, and of their willingness to change toward a better way of doing business worldwide.
Okay, thank you very much for that. Shamini, you next, please.
Thanks, Rosalind. So from my side, one parting thought is there is no silver bullet to climate change management, and there's no one company that's going to solve the challenge, not one sector. So I agree with everyone. We need to have our finger in every pot. New technologies, how do we use our current technology better? What policy packages are going to really work? Carbon taxes, punitive measures and incentives, subsidies. How do we look at green financing? And really the one other thing is collaboration, collaboration, collaboration. We need to talk more. We need to talk to every stakeholder. We need to talk on our supply chain, big companies, small companies. And I think that's where we're going to start seeing traction, is if we start working together and not fighting each other.
Thank you so much. Thank you. Werner, to you, your final point. Sorry, organizers, could we have the person speaking spotlighted? And then, thank you, Werner, please, your 1 minute final point. And leave me a minute to round off too.
I would leave you more than a minute, Rosalie. Thank you so much to everybody for being part. The key thing for me here, and it is also a call, an appeal to everybody here and to everybody who is talking about climate change in many different fora across the world. Keep in mind that there are millions of people, more than 600 million Africans do not have access to energy. And so as you talk on all of those brilliant panels with those brilliant people, a lot of them sitting in London, you know, I used to run those streets back in the days, but they have no clue. I'm sorry. They mean good, but they have no clue. And so as they talk about all these great ideas around energy transition and everything, keep in mind about those who are all in the rural areas of Niger, in the rural areas in the Niger Delta of Nigeria, and depend on working on rigs and depend on security jobs around some of these installations. They too count, and they too need to keep their jobs and their voice around having access to affordable energy counts. And I always say it this way: if at all we don't take that into consideration, we, at least on the African continent, are going to have our day of reckoning, because these kids are also on Instagram now, and they want their cell phones powered just like the kids in New York, in Hollywood, or whatever. And so we need to think about that as we join all these conversations around energy transition with all the clever people around, but some of them just have no clue about the realities of urban Niger or rural Niger. And that's it from the Africa Energy Chamber. Thank you very much.
Thank you very much. I don't think Werner didn't keep his promise. I don't have a minute left. So, but he rounded off very well. And so I really want to leave that thought in people's minds as we close this session. I do want to thank all our 4 panelists, Giuseppe, Shamini, Rachel, and Werner. I have been very captivated by the discussion. I've learned a lot. I want to thank ACEP once again for allowing me to moderate this panel. I've enjoyed it thoroughly, and thank you for allowing us to partner with you. Without further ado, I think, Ben, is it you I hand over to? I just want to thank everybody, thank our audience, thank you for your amazing questions. I really would encourage ACEP to send the questions out to the panelists, please, because I think it's important that when people have taken their time to think through and ask these questions, many of them which are clearly of concern to them, that we also honor them by answering them. So please, if you could look at the questions, send it to the panelists, and then maybe distribute it amongst those who came. I think that would be a great thing to do. So Ben, over to you. Thank you very much.
Thank you very much, Rosalind. I mean, it's been really, really, educating, and good answers to the questions, good discussions, and we couldn't have, wished for more. We will send the questions through as requested, and revert with the answers to the questioners. And the conversation actually continues. And this is a major build-up to, progress from where we left off yesterday. Really looking at, what from the business perspective, and actually tells us that there is, some action and progress from the business side. And if we can build on that from policy perspective, from those of us in activism and also engaging government, to push the climate agenda, ensure that we are on the same page, we would be able to achieve some results with that. The next section would really engage the youth and some of the activists in the space, and also to see how we can also play a role in this conversation. And I'm so grateful for this very panel, and thank you to the participants also who have stayed on for the period. About 110 of them joining, and on Facebook, almost 200 people joining. So we are very grateful to you, and we'll take 5 minutes to transition from this panel to the next one. So I'm grateful. Thank you very much, and have a good afternoon.